where she advises clients across asset classes in global markets. Kathryn, do you continue to chase this rally and look for the S&P 500 at 7,000 as Brian Belsky does?
Well, things are looking pretty good. We saw PCE came in softer than the headline suggests. They came in pretty good. Super core held steady. Inflation is moderating. Economic growth is remaining steady. I think the Fed cuts. I'm more constructive than I've been in a very long period of time. That said, I think there are opportunities, Scarlett, outside of the U.S. where there's a catch-up trade to play out. And we're talking Latin America, we're talking Asia. So yes, I do think the U.S. continues to perform well, but I do believe there's opportunities overseas that can yield greater fruit going into next year.
I wonder also, people like to say that credit leads everything, and we've seen a little bit of turn in the credit markets. You have the unexpected blowups of Tricolor and First Brands, and I know that's limited to the high yield market, but I wonder if that gives pause to equity investors as well.
There's certainly things that everyone's looking at, and we are seeing some yellow sign, or kind of like not red flags, but yellow, let's call it. But I think the focus is on labor. It's on, of course, spreads, but it's, I think, more on the labor market. So that's what my primary focus on. I think that if we get labor market weakness and that shows that the Fed needs to slash because of bad reasons, which is a slowdown in the economy and a surge in unemployment, then I think it detracts significantly from this risk on trade. But really, even at 50,000, which is what we're expecting for non-farm payrolls on Friday, I think what we're seeing now, we're avoiding a massive labor downturn, even if inflation lingers. And what we're seeing is a Fed that's able to cut, going to continue to cut. And I think we're going to see additional upside in risk assets.
You know, you mentioned that you perhaps find more opportunity outside the U.S. given where valuations are right now. The opposite seems to be true in that foreigners can't quit the U.S. stock market. They may not be traveling to the U.S. and buying U.S. products the way they were before, but foreign purchases of U.S. stocks rose to a record in the second quarter, according to Fed data, and that's kind of continued to hold up in the third quarter. Are people overcrowded in U.S. stocks right now?
Well, they have been for some time, and the interesting thing is that the multiple expansion continues. I heard my friend Cameron on just before me, and she's right. You know, earnings are expanding, and I think the U.S. remains the envy of the world. So when we're looking at developed markets, unequivocally, the U.S. outperforms and will continue to do so. And I find it remarkable that given the Liberation Day and the tariffs, what we're seeing is limited impact on inflation, you know, robust revenues from those tariffs, and a world that can't get enough of U.S. assets. So yes, I do think that there's a risk of, you know, chasing the trade. And I think for more discerning investors, particularly the ones that we at StoneX talk to, they're keen on the international markets, specifically Brazil, specifically Colombia, specifically China. So these are areas that I think, Scarlett, will see additional flow once we get through the, you know, this next leg up in U.S. assets. But the truth is, we're going to have a sponsorship for U.S. For as long as the U.S. Treasury remains the dominant asset class and the liquid, the deepest capital market in the world.
So I know you're looking ahead to the jobs report next Friday. Is there a risk that perhaps investors are underpricing, that we won't get that data and it'll come out maybe days later, if not a week later, if there is indeed a government shutdown?
Yeah, I think given the interest rate expenditures having grown so much and the interest coverage ratio that's come down here in the United States, for the first time in my career, I'm actually more worried about a government shutdown.
Really?
So I think that's yeah, you know, I'm more concerned about it at this point because of what I mentioned is this massive jump in interest rate expenditures and the drop in coverage ratios. I was an emerging markets analyst for a long period of my time, and interest coverage ratios are something you look at for EM names, but not for U.S. names or European names. So yeah, I think this is the first time I'm more concerned about it than in years past. But I do think in terms of labor market, you asked me about that. If we get a downside surprise, then October is a for sure cut. We're going to see the potential for more aggressive cutting going into 2026. But as of now, the market is fully priced, basically 90% probability of an October rate cut. So I think that's probably going to manifest.
Yeah, that's pretty much baked in. And of course, with October, we got the start of earnings season as well. The second quarter reporting season was much better than a lot of people anticipated. Some even describe it as blockbuster. Where did things stand right now with third quarter results, given where valuations are right now?
I'm still constructive. I have to agree with a lot of my friends that you had on in the prior segment. I think that we are seeing good earnings picture. I mean, the truth is the Fed is starting to cut, so that's going to help corporate earnings quite a bit. And the fact that we haven't seen too much of impact on bottom lines from the tariffs also plays a very good role. And on top of that, Scarlett, we saw data come out today showing that the U.S. consumer remains pretty robust. So in the net, I have to say that I do think that the U.S. is going to continue to outperform its peers. I'll reiterate, however, that I think emerging markets have more space to play catch up and outperform developed markets going into 2026.
All right, good stuff. Kathryn Rooney Vera with StoneX Financial. Always a pleasure catching up with you. Thank you so much. We do have some breaking news while we're speaking just now on the Bloomberg terminal. Bloomberg News is reporting that SoftBank and ARK Investment Management, that's Cathie Wood's shop, are among potential investors in a major funding round that could cement Tether's status as one of the world's largest private companies. Tether, of course, is the company behind the U.S. stablecoin USDT.